Good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India. So before we go ahead, I'd like to give a small disclaimer that any stock, any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for education purpose. So without taking you much time, I'll start with Nifty 50's chart analysis for the day, for the week. If we talk about yesterday's movement, I mean, Nifty had a gap down opening, probably breached Monday's lows as well, and it was trading in around 0.6 to 0.8% lower for most parts of the trading day. However, in the last hour of the trading session, there was some buying in Nifty, and you could see that Nifty rebounded strongly and formed a reversal candle, and but still managed to close in the negative territory, but closed around 0.19% lower. That's why if someone sees it, this volume bar was higher than this bar, but as your loss was lower than 0.2%, a distribution day was not marked. So it was 0.19%. For distribution day to be counted, it has to be exactly about 0.2% or above. So that's why this day did not get marked as a distribution day, and your distribution day count still stands at 3, and market continues to remain in confirmed uptrend. However, if you look at it, your green line, that is your 21 DMA, your 21 DMA is still acting as a stiff resistance for your Nifty at the moment. So probably global recession fears in terms of macro factors, in terms of your rate hike cycle still not coming to peak across the globe can be the few reasons your equity markets are jittery, not just India, but across the globe. So probably till the point in time your Nifty doesn't reclaim your 21 DMA, markets can remain choppy till that point in time. Overall, if you look at it from as you're talking about from the William O'Neill perspective, till the point in time, even your distribution day count continues to remain low, market will continue to remain in confirmed uptrend. However, retaking of key moving averages and probably your previous highs continues to remain important for Nifty. Talking about key news, Fitch rating affirms India's rating and triple B minus and outlook as stable. Yesterday, both your FIs and DIs remain net buyers in Indian equities of 456 crores and 495 crores respectively. Bharati Airtel entered into an agreement for acquisition of 8% stake in the technology startup Lemnisk. Unum India entered into an agreement with Isintech Korea. It's a Korean company for design, development, manufacture, and market of wheel speed sensors for Indian market. Jubilant Food launched a 20-minute delivery service for Dominos in 20 zones across 14 cities in India. A central bank to consider the proposal of raising capital via Tier 2 bonds on December 26. Talking about the global market update, probably after a couple of days, 3 days of decline, your Nifty, your sorry, your US markets uh, closed marginally higher if you look at it. There's not much of the gains to probably talk about for the US markets. So your Dow closed around 0.3% higher, S&P by 0.1% higher, and Nasdaq closed flat. On the Asian markets, it's again a mixed reaction. If we talk about Nikkei, it's trading 0.2% lower. The other two indices, Shanghai and Kospi, are trading 0.3 and 0.2% higher. Crude oil has been range bound. Yesterday it was around 18.48, $18.5. It's still trading above the $80 mark at 80.28. USD INR is was very flattish at 82.6. Talking about SGX Nifty, SGX Nifty is indicating a positive opening for today's session. Sometime back, SGX Nifty was indicating opening of above 18,500, and yesterday's close was around 18,385. So we'll have a look at the sector view in terms of how the sectors are placed. If we to, look at the broader market indices, your broader market indices, as you're talking about your Nifty 50 and Sensex continues to remain in rally. However, you can see your small cap. The small cap is the one that probably isn't coming to the party yet, and that's why it's in under pressure at the moment. And similarly, there are certain indices such as your realty, pharma, IT, financial services, and auto that come under pressure as your distribution day count in these indices are creeping up. Similarly, if we talk about from a technical perspective, from the key moving averages, your pharma and IT have come back under pressure, and both of them have breached their 50 and the 200 DMA. The other indices that have reached the 50 DMA is Nifty Realty and your Nifty Auto. On the other hand, if you look at it, your financial services, your banks are the one that are probably in the most comfortable position in terms of well above their 200 DMA. Similarly, metals as well. You can see your metal sectors rallying as well. So now coming to the chart of the day, and before we talk about the chart of the day for us is Craftsman Automation. And again, would like to give a small disclaimer that it's not a buy or sell recommendation, and we are just doing it for educational purpose. And similarly, if we talk about it uh, from William O'Neill perspective, you can see EPS strength very strong at 94. Buyer demand at A minus is really strong. Even the group rank is really good. And talking about price strength is fair at 78. But if you look at the right hand side of the base, the RS line is moving higher, which is a really good sign. And talking about from the institutional investor perspective, you can see uh, new funds coming into the stock, 42.86%, and still being a small stock in terms of market cap of around 7,000 crores. You can see 40 funds in the stock, which is a really good sign. Return on equity for the stock is really good at 14%, and if you look at the long term debt to equity is also below the threshold at 33%, which is a good sign. The previous breakout for the stock was successful, and if you look at it, the stock's forming a flat base at the moment, and you can see some good accumulation on this right hand side of the base. And when the fall was happening and during the base, the fall was on below average volume. Yesterday, probably it had the positive reaction, but I mean the volumes was lower. So probably, if we talk about it from an overall perspective, if you look at even the before the earlier bases as well, probably in the right hand side you could see good accumulation on the right hand side of the bases in the last couple of base, and probably in the last base, the breakout wasn't successful. That during the breakout, it came back to the base. It retraced to its moving averages and then probably re-breaked out, and then the stock rallied. So even this time, probably if the stock breaks out on above average volume, needs to stay above the pivot probably to consider as a successful breakout. And if probably if the breakout happens, then one can definitely have a look at this stock, and it will continue to remain in our watch list as well. So overall, thank you and stay tuned with us for the pre-bell session daily between Monday to Friday